Welcome to this scalping strategy. We shall be using these two moving averages. So we shall be using the 20 exponential moving average and the 9 exponential moving average. Okay, so now always we shall look at the trend of the market and we add it with the exponential moving averages. Okay, so now for example we have this blue one. It is a 20 exponential moving average, and then the gray one, it is the 9 exponential moving average. We shall always see the close of this moving average. Always when a 9 exponential moving average crosses and it goes below the 20 moving average, we shall consider it a downtrend, and when it goes above a 20 moving average, we shall consider it as a uptrend. Okay, remember this is a 1 minute time frame. That means we just target only a few pips, guys. Okay, so now for example here we have right here, this was a downtrend. Why? Because this 9 exponential moving average went below a 20 exponential moving average. This is what I mean. Immediately after it crosses, okay, immediately after they cross over, okay, you can see right here there is a close over right here. Okay, so now when you really look here, when you look closely here, this is a 20 exponential moving average, this is a 9 exponential moving average, and now you can see when they crossed here, you can see this gray moving average, it went below this blue moving average, meaning that yes, this one we are confirming to as a downtrend. Why? Because this is a 9 exponential moving average, it has gone below this 20 moving average. So after seeing that, here you just enter immediately. Okay, so now just enter your trade immediately after they cross over. You always have to put your stop loss above this 20 exponential moving average, and you target kinda some pips, right? So now that is it. So now when you go here, you'll see that it was moving in a downtrend until they came here and closed over. Okay, so now you can see here there was a crossover right here. Okay, so now let's see it. There was a crossover right here. These moving averages closed over, right? And after crossing over, you can see that this gray moving average, the one we call it a 9 moving average, it went above this 20 moving average immediately after crossover. Okay, so now confirming to us that yes, we are in an uptrend. Okay, so means now from here the market went from downtrend to uptrend. So now you can enter immediately after a crossover. I told you you have to put your stop loss below this 20 moving average, and you target some pips that you want to target. For example, you can target any pips you want, guys. Okay, so just know this crossover moving average, it really works perfectly. Okay, and it is having almost 60% win rate, right? So now you can see right here, there was a crossover right here, and we were in the downtrend, and after that the market, these moving averages, they came and crossed over right here. Okay, so now you can see there was a crossover right here, and this gray moving average, it went above this blue moving average, which is a 20 moving average. Okay, so now after doing that, we confirmed it as an uptrend, right? So now here there was an entry right here. So now you always have to put your stop loss below this 20 moving average, and you target what you want to target right there. Okay, so now that's the first method that you can use to scalp on the 1 minute time frame. And another method that we can use is what we call retracement method. Okay, this is a market structure shift method. Okay, so now always we shall be trading a retracement, guys. Okay, example, if your market, it is in a downtrend, for example, this is a downtrend. Okay, so now if your market, it is in a downtrend, always there are retracements. For example, that is a downtrend, so this is a downtrend. When the market comes back like this, that means it is making a retracement. It comes back to a certain zone, then it moves again, then it makes a retracement like that. So let's start from here, guys. Right, so now always we have to first see the direction of the market. You have to first see whether the market is in the uptrend or it is in the downtrend. Now, for example, here the market was in the downtrend. Why? Because higher lows and lower lows, higher lows and lower lows, they were being broken, right? So now, for example, here this was a lower low. This was a lower low here. So now you can see there was a break of this structure right here. That lower low was broken, and after being broken, remember this is the high that made the break of that low. Okay, so now this was the high that made the break of that low. Okay, that means always we have to wait for the market to come either to either zone, or you first wait for the market to come and sweep that uh, that high, and it does it as liquidity. Okay, because now some people, they will put their stop loss above here, they'll put their stop loss above this high. That's why the market will always come and first sweep out these early sellers. Okay, so now you can see that after sweeping out these early sellers that were sold here, okay, you can see that after sweeping them out, the market just moved perfectly in our zone. Okay, so now in our direction, you have to go like that. Also, after that, you have to indicate your other low. For example, this one, it was the low that has been created. It's the new low. Okay, so now after that, you have also to see that now this was the high that made the break of that structure, right? So now sometimes it won't go up the premium or up the discount level. Rather, it will just use this support level or a resistance level to move. Okay, so now for example here, this one used our level here. When it came here, you can see that it used a support level right there, a resistance level, sorry. So now when it came there, it used a resistance level to move down, right? So now, as you a scalper, you can just be vigilant with this one. When it comes there, you can just risk in from any direction you want. Okay, so now also we have what we call a market structure shift. For example, when the market is moving in a downtrend, right? Now for example here, when we have a market moving in either a downtrend or an uptrend, for example, now this was a downtrend, or is there was a time the market will come and makes a structure shift, right? And it becomes a bullish trend, because now the other time was a bearish trend. Now this one, it has turned from bearish to bullish. So now this one, it is what we call a structure shift. It has reached a time and it has shifted structure, or it has made a change of character. Sometimes this one, it also works on our 1 minute time frame. Okay, so now this is a sweep of liquidity on both sides. That means it has swept liquidity of those early sellers there, and also these early buyers, it has swept liquidity. That means now this one will become this one, now it becomes your protected low. Always, sometimes the market won't come back, or when it comes back, sometimes it will just sweep it as liquidity before it buys or it goes to your desired direction. Okay, so now for example, we are here, guys, right now. This market was in the downtrend. When it came here, it left this lower high. Okay, there was a lower high right here. So now this lower high, it came under, and they swept it from up and down, right? So cause now this was a lower low right here. So you can see how that low was swept up, and the other high was swept up, and this low was swept down. After sweeping that liquidity, you can see that there was also another trend line liquidity right here. There was a lot of liquidity that had to be swept before actually we move. Okay, so now you can see. So now there was also that inner liquidity, or a trend line liquidity. Okay, so now after that, after sweeping that liquidity, of course for us, we don't trade breaker. We are not breakout traders. Rather, we are liquidity traders. We always have to wait for the market to come to our zone, and we see how it behaves. So now after this, it showed us some of the bullish power. Okay, so now here, after sweeping all the liquidity, we can just enter the market, and you can see how it moved after sweeping all that liquidity, guys. So now just the market will always respect our zones. So now those three scalping techniques, guys, you can use them to add on your trading setups when you're trading, guys. So hope they have been helpful to you. Thank you for watching. This is Jimmy. Stay safe and goodbye.